Hey folks, Bojas from Independent Solutions here. Written by Michael Lewis, the author of The Big Short, Inside the Doomsday Machine. The early 1980s were a time of economic growth in Israel. The Tel Aviv Stock Exchange was thriving. New investors flocked to the market, eager for profits. Banks held immense power and influence. They dominated the stock market. Banks were seen as safe and reliable. People trusted them with their savings. No one foresaw the crisis looming on the horizon. Israeli banks were flush with cash. Years of high inflation had fueled their growth. They engaged in aggressive lending, particularly in the stock market.
They began manipulating stock prices to inflate their value. We bought and sold shares of companies we controlled. This created an artificial demand. Stock prices soared, but it was a house of cards.
Stock prices soared, but it was a house of cards. Banks encouraged customers to invest in the booming market. They offered easy credit and touted guaranteed returns.
Brokers pushed high-risk investments, downplaying the dangers. The public, caught up in the frenzy, poured their savings into the market. Few questioned the sustainability of the boom. Greed and the promise of quick riches clouded their judgment.
Government oversight was lax, regulations were outdated and inadequate. The Bank of Israel, the country's central bank, failed to recognize the warning signs.
Some argue that regulators were complicit. They turned a blind eye to the bank's manipulative practices. The close relationship between the government and financial institutions raised concerns. The stage was set for disaster.
Section 5. The bubble bursts. In October 1983, the bubble burst. Investors, sensing danger, began selling their shares. The stock market plummeted. Panic ensued as share prices crashed. Banks, heavily invested in the market, faced massive losses. The crisis exposed the fragility of the Israeli economy. The consequences were swift and severe.
I remember the chaos. People were frantically trying to sell their stocks, but there were no buyers. It was like watching a nightmare unfold.
Section 6. Government to the rescue. The Israeli government faced a dilemma. A complete financial meltdown seemed imminent. Emergency measures were necessary to restore confidence.
We had no choice. The situation was dire. We had to act quickly to prevent a total collapse.
The government nationalized several major banks. They used public funds to bail out failing institutions. These actions were controversial. Many saw them as a bailout for the wealthy and well-connected.
It was a tough decision. We knew it would be unpopular, but saving the economy had to come first.
Section 7. The Beisky Commission investigates. A commission of inquiry headed by Justice Moshe Beisky was appointed. Their task was to investigate the causes of the crisis. The commission's findings were damning. They revealed reckless lending practices, lack of transparency, and regulatory failures.
The Commission's report was a bombshell. It exposed so many wrongdoings. Senior bank officials and government figures were implicated.
The report led to resignations and a loss of public trust.
It was a turning point. People realized the extent of the corruption and mismanagement. It shook the very foundations of our financial system.
Section 8. Scars on the economy. The crisis had a profound impact on the Israeli economy. The country plunged into a recession. Unemployment soared. Businesses closed. The government implemented austerity measures. These included spending cuts and tax hikes, further hurting ordinary citizens. The crisis exposed the structural weaknesses of the Israeli economy. Section 9. A society shaken. The crisis had far-reaching social consequences. Public trust in institutions was shattered.
People felt betrayed by those in power. Anger and resentment towards the financial elite grew.
The crisis exacerbated social divisions. The sense of shared sacrifice was absent. Many believed the burden fell disproportionately on the poor and middle class. Section 10. Lessons learned. The 1983 bank stock crisis was a painful but valuable lesson. It highlighted the dangers of unchecked speculation and inadequate regulation. The crisis led to reforms in the financial sector. New regulations were introduced to prevent a repeat. Section 11. Preventing future crises. The crisis emphasized the need for transparency and accountability. It underscored the importance of ethical leadership in finance and government. The lessons learned from the crisis continue to shape Israel's economic policies today. The goal is to prevent future crises and ensure a stable and prosperous future.